Today we're going to look at the general journal and what are called source documents. We're actually going to really get into the actual steps in the accounting cycle. So I know you might be thinking it's December and we haven't been doing any of the steps in the accounting cycle or the accounting process. And no, we have not. But everything we have done prepares us to begin the actual process. And now we can move fairly quickly through the first three steps of the process that you see in front of you, because we've essentially done them just in a different format. So the first three steps that we're going to be looking at over the next 2 weeks or so are recording business transactions in a journal, posting entries to accounts in the ledger, and preparing a trial balance. So you've actually done all of these. They've just looked a little different. Okay? So let's talk about what a journal is, the general journal. So journal is a book in which business transactions are recorded as they happen. Journalizing is the process of recording a business transaction in the journal. And then your source documents are things such as checks, invoice, receipts, letters, and memos that provide information for business transactions. So in the world of accounting, accountants are given a stack of documents, and they're all different kinds of documents. Okay, they're like the ones listed here: checks, invoices, all of these things. Okay, they're given stacks of these, and they need to interpret them and figure out what happened, what the business transaction was, and then record it in this journal. Okay, and a journal lists all the debits and credits that a company incurs. All right. So here's a sample of what the journal looks like. And I don't have you writing anything here. So you notice there is a heading up top, right? And then we have the date column. Okay, so looking at the date column here, you notice there's two parts to the date column. The first part of the date column is where you put the year and the month. And the second part is where you put the actual number date that a transaction occurred. When the accountants start journals, they start them when 2021 gets here, they will start a new journal, or when the new fiscal year comes, I should say, okay, which for some is July to July, some is January to January. But when that happens, they will start a new journal, and they will put the date, the year up top there in that first column, like you see there, okay? And then they will put January underneath it, and then they will start listing the transactions. Okay, so they have one. Now, let's say another transaction happens on the second. Actually, what they just do is they just put a 2 right there. Okay, they don't repeat writing down the year and the month. Okay, the description column, this is where the actual debits and credits are recorded. Okay, now if you recall, I kept telling you write the debit first, write the debit first, write the debit first. That's because in the journal, the debit gets recorded first. Okay, so the account to be debited is written. Notice that it is flush against the left side. It's all the way over. And then the amount for the debit is listed in the debit column like you see here. Okay, then when you have a credit, you're going to indent for your credit. I like to say hit the space bar like 5 times. Okay, you record your credit, and then you record your credit amount, and you do have to include cents. Okay, before we didn't always have to, but now that we're using the journal, we have to. And then you write a little description to record the original investment by Jay Connor. Now notice the description is indented as well. Okay, so everything is indented. Accountants are very particular about how things look. They like things to look very neat and orderly. All right, so you just write a little, couple word description about what happened in the transaction. If you're looking at source documents, you would record the source document number, which we'll see an example of that in a few minutes. And then that is a journal entry. Okay? So what I have here for you, and I would like you to take the time to do this, is you have 3 transactions written down. Okay? These 3 transactions. There's transactions we've done before, I'm pretty sure. All right? Below that is the journal for what it would look like. I would like you to key the journal in on your Word document. Okay? Keeping in mind that the debit is listed all the way over to the left, the credit is indented, and then the description is indented some more. Okay, now students always ask me about the descriptions. Is there a right or wrong? There's really not. There's no like specific things that need to go in a description. It just needs to say what was happening. Okay. All right, so source documents. So we're not going to work with source documents all year long, okay? The majority of the work we will do when you are recording business transactions will look like these business transactions that you see here, okay, where they are typed out in words for you. But it's important that you get some practice with source documents. We will do an assignment with them, and then we'll do, I don't want to say like a quiz, but you'll do like a graded assignment with some source documents, okay? But it's not something that you have to fully master. I just want you to get some experience with it, all right? And there are 4 main source documents that we're going to look at: invoices, receipts, memorandums, and check stubs. Okay, so here's our first one. This is an invoice. Okay, invoices list specific information about a business transaction involving the buying or selling of an item. The invoice contains the date of the transaction along with the quantity, description, and cost of each item. All right, so when you're looking at source documents, the first thing you need to do is figure out if you're receiving the document or sending it out. Okay, in this case, the name of our company is Dario's Accounting Services. All right, if I zoom in, so you could see that right here, right? So we are receiving this invoice, okay? And we are receiving it from J Max Office Supply on the date of April 9th. It is payable in 30 days. This means that we did not pay cash, okay? So that's a big hint to you that cash is not involved in this transaction. And we received a fax machine. Okay, so this transaction will look as you see here. We write the year 2019. Now it says 2000 dash dash. We are always just going to assume that it's the year before. Okay, that's how the textbook is written. So 2019, April 9th. The account being debited is equipment because that's what we're receiving. The account being credited is accounts payable because we owe them the money. It says that it's payable in 30 days. And then we simply write a description, bought equipment on account. Okay? Now, there might be situations where we send out an invoice, okay? So if the company is sending out an invoice, and that's going to be important for when you're working on your independent stuff. So if the company is sending out invoice, that's going to trigger revenue for you. Billing people. Okay. All right. Receipt. So a receipt is a record of cash received by a business. So right here, received by a business. So whenever you have a receipt, for the most part, you can bank on it's going to be a debit to cash because you're receiving cash. Okay. It indicates the date the payment was received, the name of the person from whom the payment was received, and the amount. So if we look at this one, here our company is called Roadrunner Services, okay? This transaction happened on October 14th, all right? It's received from Green Company for services previously billed. So what you need to do is think about what this transaction may have looked like when we first recorded it, okay? So services previously billed. This is what the original transaction would have looked like. It would have been a debit to accounts receivable because they owed us the money and a credit to revenue. So they are now paying us. So what do we need to do? Well, we don't do anything with revenue because we already received that money. I mean, we already recorded that revenue. We already recognized that we earned it. They're paying us in cash. So we're going to be debiting cash. And they're paying off a debt they owe us, so we're going to credit accounts receivable. And again, remembering that we're indenting and then recording a description. Okay? So that is a receipt of cash. All right, a memorandum. This is a brief written message that describes a transaction that takes place within a business. It's often used if no other source document exists for the business transaction. So if there's no invoice, there's no check stub, there's no receipt, they're going to write a memo of something that happened. Okay? And so this one, again, we are Roadrunner Delivery Service. It was sent to the accounting clerk from Maria Sanchez. It was sent on October 1st. And it says contributed personal funds to the business. Okay, so this personal funds should be a keyword to you, or keywords to you. And what that should trigger in your mind is investing. And when we know when we're investing, capital is involved. Okay, so I have contributed $25,000 from my personal savings for a deposit to the business Roadrunner Service. Okay, so she is investing capital and in the form of cash. All right, so it's going to be a debit to cash, and it's going to be a credit to M. Sanchez, and this should actually say capital. I forgot to put that in there. All right, in the amount of $25,000, and then personal investment of cash. That's a memo. Every memo is going to look a little different. All right, and finally, a check stub. So when we look at check stubs, it means that money is going out of the business. Okay, we are writing a check. And when we write a check, it's like giving out cash. So when you see check stub, you can think, for the most part, it's going to be a credit to cash. And I always say for the most part because I used to always say it's always going to be. And then we would run into like a really strange transaction or a really strange, occurrence where that's not true. So I always say for the most part, 99% of the time. Okay. So your check stub is going to list the same information that appears on a check. It's going to have the date written, the person or business to whom the check was written, and the amount of the check. It's going to show a balance in the check before and after. So we're going to look here. There's two places in which you can see the amount of the check. It's going to be up here and down here. Okay. Now, we will later in the year go through a whole unit in which we go over writing checks in this fashion. Okay. We're sending this to Info Systems for computer. And it happened on October 4th. So here's what that transaction is going to look like. It's going to be a debit to computer equipment because that's what we're getting. And it's then going to be a credit to cash. Okay, and both are in the amount of $3,000. All right, so that's a quick overview of journaling and source documents.